This is FinTech Futures at Sibos, and I'm joined by Sanat Rao, CEO of Infosys Finacle. Sanat, thank you so much for taking the time out to come and speak with us. What's your experience been of Sibos this year, and what are the key themes that you've been noticing?
Thanks, Paul, for having me, and it's always a pleasure to speak with you. Just as it's a pleasure to always be at Sibos, because it's an event I've been attending for, over 10 years now, and it never ceases to amaze me how something new comes up each year. So I think this year, certainly there have been a lot of changes. I think if you look at the headline theme itself, collaborative finance in a fragmented world, I think very aptly captured in terms of what it represents and what it conveys, given the state of the industry and the macroeconomic environment today. I think as far as the conversations are concerned, very enriching, as they've always been at Sibos. And I say that despite the fact that there are dark clouds on the macroeconomic environment hovering around us. I think that's been seen in the attendance here. It's probably slightly lower than it has been in the previous years. But I think the quality of conversations have always been very, very high, as they've been in previous Siboses. I think when you attend Sibos year after year, you find some continuity in terms of themes, but a maturity in terms of the quality of conversations, and then you find something new. So let me pick on both of those. I think in terms of continuity, clearly digital transformations are still very much a topic for discussion, because a lot of banks have embarked on that journey, but their challenge has been obviously to do it to scale, right? And that journey is pretty much on right now to do it to scale. Cloud, it's been around for a while. Banks have been talking about it. Many banks have taken steps towards moving to cloud, but each time there's something new to learn from other experiences. So I think cloud continues to feature prominently. At the same time, it's still an initiative, I think, which has some way to go before you can say it's fully mature across the industry. I think in terms of what was new this time, I'd pick out two. One is clearly a lot more focus on sustainable finance and ESG, which again is not a surprise given its prominence in many different conversations across the world, outside of the banking industry as well. And the other one, inevitably, is generative AI. So while AI, of course, was there in Sibos, given all that's happened in Gen AI in the last 6 months particularly, I think that has featured prominently here, which is something new, and we didn't see that. So if I were to summarize it, probably slightly lower attendance, but a great Sibos always, very enriching conversations, a variety of different themes, and certainly, very happy to listen to the many different perspectives that people are talking about.
Excellent, excellent. And you briefly touched on there the relatively bleak macroeconomic picture that we've got at the moment. How do you think banks and corporates have been responding to the challenges that they've been facing recently?
So there's obviously no one size fits all, and clearly even the macroeconomic environment is manifesting itself in different ways in different parts of the world. So I'm going to give you a slightly generic answer there. I think, so let's take ESG, for example, sustainability. I think, the banking industry has, I think, taken a lot of initiatives to recognize the concerns, the justifiable concerns as far as ESG is concerned. And I think we're seeing conscious steps being taken by the banks in a variety of different ways. One is in terms of their own operations and how they conduct business themselves. The second is a lot of focus and I think a very definitive approach in terms of who to lend to and who not to lend to. Right? We didn't see this in the past, and I think that's a trend in the right direction. The other element I'd point to is, banks occupy a very important place within a larger ecosystem. And I think today there is both an overt and a covert pressure in terms of how different players in the ecosystem operate with banks with a focus on ESG. So I think they're very encouraging trends there. I mentioned cloud a few minutes earlier. I think banks are recognizing that as they grapple with larger volumes and as there is almost a demand to do more with less, they're recognizing that moving to cloud and having stable operations in cloud is going to be a long way helping them get more efficient there. So I think a lot of focus towards cloud, and I'd particularly point to the fact that in different parts of the world in the last year or little more than a year, banks have had outages, banks have had challenges with their infrastructure, and both customers and regulators are not taking kindly to that at all, right? And to some extent, moving those operations to cloud and getting the larger benefits of a mature cloud player in some ways circumvents that problem that banks have, rather than trying to do everything within their own data center. So I think that's another way they're sort of combating that. If I were to just pick one area of business function and domain, I'd probably point to liquidity and cash management. And I'm highlighting this only because we talked about the macroeconomic environment. And today, corporate treasurers are asking for more and more flexibility and more information on demand, so to speak. So if there's a corporate who's, banking with a particular bank and they have, let's say, accounts in different countries, they need to have access. They want to know information, overnight positions of cash, how they move cash across jurisdictions, how they use that cash effectively so that it doesn't lie, in some savings account that doesn't earn them much interest. So I think there is a lot of focus on cash management for its judicious use, and I think that's been a very encouraging trend that we've seen.
Excellent, excellent. I know business model innovation is something you've been talking about quite a lot recently as well. Why do you think that topic is so important and urgent for banks these days?
That's a great question, Paul, and I could talk one whole day purely on business model innovation. I think there are different reasons why it has garnered the kind of interest that it has in more recent times. First and foremost, the banking industry is just getting more and more competitive, right? In the past, we used to talk about the new digital banks that are coming up, who don't have the challenges of legacy that some of the larger banks have. And there are many of these, and many of them have been around for a while, and they've obviously scaled. But more than that, I think the fact that there are lots of non-banking players coming away and weaning away business. Just look at what Apple is doing, right? The host of financial products without necessarily being a bank. And there are many other non-banking players similar. You go to Asia Pacific and out of Singapore, you see Grab, the taxi hailing company, offering financial products, right? So I think the fact that there's a challenge coming from virtually every side within the industry and outside is certainly making banks think of new ways to combat that. The second is that customers like you and I are getting more demanding, and our experience is not of what the next bank on the high street is doing. Our experience is from what we gain when we, interact with an Uber or Netflix or Amazon, for example, right? And we expect our bank to sort of, behave and react in the same way. So I think there's pressure on banks to replicate the seamlessness and service that some of these digital platforms from outside the banking industry have demonstrated. So I think that's certainly adding to the pressure, and customers are getting more demanding there. And last but not the least, technology is available today, and technology is stronger and more powerful than it ever has been. And it's available to support banks to make the kind of competitive changes that they need to make to be able to truly bring innovation to the table. And oftentimes, innovation is used very loosely, but I think banks are recognizing that today technology can be a big supporter towards that, and therefore it's a combination of the availability of powerful technology at a manageable cost, the environment in which they're operating, and the pressure that's coming in terms of customer expectations from non-banking players, and of course the competitive pressures from within the banking industry, which are making it very, very compelling for banks to look at something different. I just want to summarize this by saying that partly because of the huge change that the world has been through after COVID, the population at large has never been more ready to embrace anything new as far as technology deployment is concerned. I mean, who would have thought that we'll operate the way we did for those 2.5, 3 years of COVID? If someone had told us this prior to 2020, we wouldn't have sort of said that the world can operate that way. But the truth is that we found a new way to operate, and it was all completely centered on the way technology has enabled us to do things differently. So I think banks are recognizing that the world is ready today to embrace new ways of working, new ways of operating, new ways of interacting with one another, and therefore business model innovation is ripe to sort of leverage those opportunities.
So you've spoken previously about the need for continuous evolution via composability. What are the key steps that banks need to take to prepare for that?
So here again, I'd point to what I said in response to your previous question about the power of technology which enables banks to do things differently. Composability, I think, is arguably one of the most powerful new ways of deploying and using technologies that is increasingly being picked up by banks. I'd sort of point to a few dimensions of composability. First is, as far as the ecosystem itself is concerned, banks are recognizing that they can't do everything, they shouldn't do everything, they're probably not the best at doing everything. And therefore, in the open world that we're operating in, it's very essential to complement and tap into capabilities of other players within the ecosystem. And, touching on the business model innovation that we just spoke about. So the banking as a service proposition is a good example of a business model innovation which can be used here, where a bank uses its banking license but then collaborates with other players in the ecosystem to be able to make a set of different services to be brought together. And a good example of this is what Goldman Sachs is doing using its banking license with Stripe and Shopify. Right? So 3 different players from 3 different industries coming together. So that's the ecosystem composability, where each different party does its own thing and it's all stitched together to offer a proposition to the clients. The other element, I think, is what we call experience composability. Now, when you and I interact with our bank, the multiple touch points that we interact the bank with. Traditionally, it used to be the branch, then it became electronic channels, and in a world of open banking, increasingly we're going through third-party channels. And therefore, there's a great opportunity for banks to create an environment where the whole experience can be broken up into composable and more manageable experiences, whereby, irrespective of whether the experience happens from different touch points, each of them individually can be a high-performing and a very memorable experience for the customer. So that's as far as experience composability is concerned. The third is process composability, and this is linked to the experience composability and the ecosystem composability, because in the environment the bank's operating in, there are different processes that are being undertaken either by different technology systems or by different players, right? And therefore, the opportunity for the bank to look at individual processes and make them available in a manner that makes it seamless, makes it easy to use, and above all, makes it a delightful experience for the customer. So the different dimensions of composability, as I explained, I think all of these become important. I just want to sort of summarize this, Paul, by saying that these are early days as far as banks understanding how they can leverage composability. I think we're going to see some great examples in the coming weeks and months as banks become more comfortable with this whole idea of composability. And I stress on this because, 10, 15 years ago, the proposition was to do everything and tightly couple everything, right? And in the last decade, things have changed as technology has changed. And today it's about breaking it down into smaller pieces and picking and choosing, what you want to do. So I think composability itself is still a phenomenon which everyone is familiar with, but it's still, I think, got some way to go before banks are able to sort of do it at scale and do it across the enterprise and make a real difference as far as the ultimate client is concerned.
Excellent. And I mean, you touched on it right at the start of our conversation, but AI has been obviously a huge topic in financial services as well as across industries. I know you in particular had an eye on ethical AI as well. Can you share your thoughts on how banks should go about making progress in this area and how they can really tap into this technology?
Great question, and I'm glad you asked that question because ethical AI is a topic that's of particularly great interest to me from a personal perspective. And I must say, if there's one area where the Sibos has been a little disappointing, it's around this. Because while there have been a lot of sessions on Gen AI and AI in specific, I've heard minimal reference to the ethical deployment of technology. Not that people are not conscious about it, but I think it's still not risen to a level where it becomes front and center of conversations and of actions on the ground. I think first and foremost, if I were to sort of point to different steps that need to be taken, first and foremost, I think there needs to be a element of education and acknowledgement at the highest levels within the banks that it's not just enough to understand what a powerful AI technology can do. It's equally important to understand what's the ethical and the right way and the responsible way to develop and deploy that technology. And this has to be something that's driven from the very top. It's not something that can be relegated down to middle level management in the IT department. I was at an industry forum in Asia Pacific recently, and I was part of a panel discussion, and I ended my session as part of the panel where the moderator asked me to make one final comment along with other panelists. And I told the audience, I said, within the next 18 months, every one of your banks will find that ethical deployment of technology has become a boardroom discussion. And the moment your board and senior management start talking about it, it'll sort of percolate down to other levels. So I think first and foremost, like I said, banks need to acknowledge that this is an issue that needs to be contended with and it needs to be driven from the very top. I think the second element is that just as you understand ethics in our day-to-day life, there's no one right definition for everyone. What the way you understand it and the way I understand it is going to be very different. And therefore, I think banks need to create a model and a framework within their organization to facilitate healthy and robust conversations about what they understand by ethics and what do they need to do. And mind you, in many of these areas, they're working with fintechs, they're working with technology partners, and it's an opportunity for them to influence the thinking of other partners in the ecosystem as well. So I think that's the second point. Last but not the least, I think there is some work to be done as far as the regulators are concerned, because I think, particularly as far as AI is concerned, as we've seen in the recent past, there are well-known people in the technology industry who are now calling for more regulation, including players who are developing and making available AI technologies. So I think there's a real and a serious realization that if you don't have regulation to control irresponsible deployment of powerful technologies like AI, then mankind could be heading for the kind of problems and challenges that we'd rather stay away from. So I think in the next 12, 18 months, you're going to see a lot of thinking and work around regulation and standards and protocols here. The EU certainly is taking a lead there, pretty much like they did as far as GDPR and privacy was concerned. And I think once that happens, industries like the banking industry will be forced to move towards making very definitive steps in terms of embracing powerful technologies, but embracing and using them in the right manner. So I think it's early days. It's a little disappointing that it's not being discussed as prominently as I think it should, but I remain an optimist, and I know that they will pay attention to it and it'll get done.
Excellent. Well, thank you so much again, Sanat, for taking the time to speak with us. Hope you enjoy the rest of the conference, and it's been a pleasure.
Thank you, Paul. Thank you.
Thank you.